Hello traders, it's Samurai Trader here. Welcome to this session 114, and let me turn my lamp on here because it just might make it a little, yes, maybe I'm a little more visual, see me a little easier, and just turn it down so you don't get my overhead light as much. There we go. So welcome to session 114. So in today's session, I'm going to be covering a number of live trades I've taken. I've just got back from the gym and I want to show you a trade I took just before I left. But what I'm going to cover in today's session is critical that you stop, watch, listen, and learn. Whether or not you become one of my members, because yes, I'm going to give you a 30-second advertisement on my course, but even if you don't become a member, stay, watch, listen, and learn, because I'm going to be showing you a number of techniques, ideas, and strategies that truly has the potential to change your trading results for the better for life. Unfortunately, we live in an age where traders want to jump from one thing to another. It's what we call the shiny object syndrome, or the next shiny object syndrome, or it's one called skepticism. Traders, I'll explain the logic of the trades and the setups I take to you, but what you've got to do is slow down and have what we call the growth mindset. That is, Carol Dweck wrote an excellent book on mindset, and she said, and by the way, you know what, there'll be traders who will be switching off straight away. They don't want to hear about this, and they wonder why they don't ever make it as a trader. What we do know is only 3 to 5% of traders actually make money. It's because what I'm talking about now, they don't want to hear about it. Traders, this is my life, this is my passion, and my job as a trading coach and as a trader is to be direct. I don't have to be your friend, but what I've got to do is deliver the best of the best as a researcher. I might have failed to say that, is I've been researching and day trading now for over 28 years. So once again, whether or not you become a member of mine or join my live trading room or my coaching room, it does not matter. What I want to make sure I deliver to you from the bottom of my heart is some strategies, ideas, and techniques that put you on the right road. So stay with me. Yes, I'll give you a quick 30-second advertisement, but look, we'll probably go for 40 minutes, maybe 35 minutes. But if you jump from this video, particularly with what I'm going to cover with you, obviously you're not really serious, or you're not cut out to be a trader. That's how serious what I'm going to cover with you today. So let me now go back to what I'd normally do. And I think what's put me on and give me this little lecture I'm giving you here is, as a researcher, I'm really interested in what I call the science of learning. And what's the difference between a trader that really hits the big time and one that fails continually? Generally, it's mindset. So on the weekend, over the weekend, because I've got a coaching class in an hour and a half, I have this exclusive group of 12 traders that I coach, and we talk about, and my job is talking to them about how do they get to that level of a $500,000 a year earner. So I love the work of Dr. Andrew Huberman, and I was studying his work on the weekend called The Science of Goal Setting, because it's science-based. And as it points out in the articles, I've got a ton of these research reports, is that most traders won't take the time to understand the neuroscience behind successful trading. And I want to start to drill down on that more and more in my videos and in my classes with my members. So this is what we're going to cover. Okay, so how do you net $1,000 plus per day? All right, now if 1,000's not enough per day for the young guns, I know it's probably not. Okay, you simply increase your position size, or you trade a few more hours a day. What I cover also in these sessions, you can use on Forex, stocks, futures. It doesn't really matter. but in the end, traders, you've got to follow the rules. But anyway, let me get into this. Okay, so first of all, in today's session we're going to be talking about trading, particularly the ES. Now ES, if you're not aware of it, it's $50 which you should have heard of the ES, $50 a point or $12.50 a tick. The great news is, if you don't have the funds available to trade this market correctly, which I'll cover, you can start on the micro, which is 10% of that value. Now also, there is a risk in trading. Don't trade with money that you can't afford to lose. And the great thing about trading in today's modern world, you can start off on the simulator, and so you master the setups on the simulator, then you go to a micro. Even if you got $50,000, $100,000, aim small, miss small. Let me get it right. Oh, by the way, these videos are unedited. Okay, so let's get into this. The quick 30-second advertisement. If you haven't already, you can download my free day trading ebook, The Truth About Day Trading. Make sure you subscribe to my channel to be kept up to date with all of my videos. But still become a member. What I cover in these sessions I teach you in my course. Okay, so for $197 you get all of my indicators. If I don't have indicators for a particular trading platform you may have, I give you the settings so you can set up basically everything you see on my charts, basically with common indicators. There's over 200 hours of online instruction. The good news is you don't have to watch all 200 hours. You want to drill down on just my top 2 or 3 strategies and you take it from there. Now I also have a bonus, so all of this for $197, where you can also attend 8 of my live and they're recorded if you can't attend the live sessions, private group coaching sessions, where 16 hours of, if you like, group coaching, where I cover step by step exactly what I do and how I do it. But we go into a lot more than that. We do the psychology of trading and a whole lot more. All of that for $197. You can join using the link below. Let's now get into this. Stick around because I'm going to give you some real meat on the bones today. So first of all, let's talk about why it's important that you have goals to begin with. When the why is big enough, the how will appear. And what was really interesting, and I must have had my staff transcribe this a long time ago. When I say, gee, it must be 12 months ago, and I read it, but I had an aha moment over the weekend. And Tony Robbins started teaching this concept, I think it was back in the late 1980s, early 1990s, called the Dickens process. And basically what I reread here, and as they say, when the student is ready, okay, it'll appear. Finally it appeared that if you're not familiar with the Dickens process, it's perhaps one of the most important things that we can do is to apply what we call the Dickens process. And Dr. Andy Huberman doesn't refer to it, but there's a ton of research on it. The point is, you can be achieving this. Okay, you can truly achieve this with time, practice and devotion. The fact is, most people are lazy, and it's a bit like a gym membership. Okay, and learning how to trade really is. That is, you can take a gym membership, you go there the first couple of times, it's a bit hard, you get a bit sore, so you stop going. And you know, then you say, oh, that was expensive, wasn't worth it, whatever. Fact is, most people are lazy. Okay, what it is, motivation is what gets you started, but habit is what keeps you going. But what I want you to think about here, what would an extra $1,000 a day mean to you? Project yourself 5 years forward. What would have that done to your life? What if you don't achieve that? Anyway, look up the Dickens process on the internet and read what it's about. I know most of you won't do it, but for those that are open-minded, do it. Now, how do we achieve $1,000 a day realistically? Yes, I can show you earning $400 or $500 a day per contract. However, let's talk about, you know, tiny steps. Okay, not too easy, not too hard, just right. So this is realistic if you put the work in, as you're about to see. trade 10 contracts $100 a day, or trade 5 contracts $200 a day. Okay, trade 10, that's $2,000 a day. This is the true potential. Now the best way to master the art of day trading, which, as you're about to see, is initially you want to be trading in the direction of the tide of the ocean. And as I say on this slide here, think of a market as an ocean. The major trends of a tide, the smaller trends of the waves. We want to look for the retracements and the trend continuation in the direction of the higher time frame, and then we'll get divergence trades or reversals, which I love. But for new traders, I recommend you sit on your hands initially when it comes to divergence trading. Now what I'm about to do is show you a number of charts, then I'm going to duck over to the live charts themselves, because I want to show you on the charts the good, the bad, and the ugly. Do I make mistakes after 28 years? Hell yeah, I make some beauties. However, what I do believe in is what I call the 80-20 rule. That is, I'm after the 80% trades. 20% of the time I'm still going to be wrong. Hopefully it's a bit less than that. Most of the time it's slightly less than that. However, we're not going to get it right all the time. But what I do, and I'm about to show you a mistake I made here, and I want to explain this because unfortunately so many educators won't give you the good, the bad, and the ugly. I don't care what you think about me. In other words, I want to show, if I make a mistake, I want to try to help you avoid the same mistake. For an example, this one here, we're about to look at my trades I made money on, then the one this afternoon or this morning my time. But here's a classic, it's so easy to make this one, is because I trade multiple markets, I have a different dome set up for each market, so I can have different stop lots. But what's very important here is you create what we call muscle memory, where you put that dome on your screen. Do the same thing each and every day, and same where you have the markets. Here, for whatever reason, I'd moved it, the dome, and I went and clicked on the wrong market and on the wrong dome. And so I entered the trade on CL when it was meant to be the ES. Now okay, I got out and I made one tick out of it, but the point is very easy to do. So check the number of contracts before you start trading each and every day, and make sure you're executing on the right market. So let's now get into this. So I'll be very quick with this because I want to go to the live charts and show you some critical information, some things that will have the potential to immediately change your trading today. So first of all, you can see here where I've got a retracement here. You'll see me quite often, I'll drop Fibonacci levels in more out of interest. But if you do like fib levels, you don't trade fib retracements on their own. What you're looking for is a retracement, then an additional reason for taking a trade. Now this is a trade I took. For members watching this was a 3B. I then added to the position because I was already in a winning position. Thank you very much. That was a potential short there, and I had one just here. Now what's that black line? That is a pivot, but it's also on this particular day, yesterday's close and the current day's open. These are what we call pivots. We bounce off these levels each and every day. The great thing about pivots and the open, high, low, close levels is there's indicators on virtually every trading platform that will plot these automatically. Now I then down here further, I had for members watching this, I had a T3. You'll notice I use a lot of codes. It just makes it easier than giving the big long name, particularly with members. So here we had this is, by the way, very important another important factor here. This is what we call angulation. When you have angulation, that's where you see price action angling strongly away from the EMAs. You're much more likely to have a reversal, and you quite often have no divergence. And so there would potentially have been a nice trade. But anyway, up here, and I then jumped in on this one. Now this is one where I got a bit greedy. I was going for 4 ticks. I only ended up picking up 1 tick. So let me tell you about this particular trade. And I had one here which I wasn't in on, but this particular one here, I was after the 4 ticks. I then hit 4, and instead of getting a break even and locking in what I could, I then stayed with it, and I only got out with +1. Now, why did I want to get out here at +4? Look at all the pivots above me. Now, this was on a Monday morning. Okay, so Monday morning my time, late in the day, where you'll actually have the way I calculate my pivots, they'll be very close together. You've got to be very aware of what we call pivot bounces. May sound complicated if you're a new trader, but let me tell you, it's really quite simple once you understand what they are. I got a wee bit greedy. The bottom line is here, it was all over in in about an hour. I'd wrapped up the trading, hit $200 plus per trade after commissions. Thank you very much, and I'll show you the benefits of that in a moment. But then just to trade today, so this was a number of days ago that there, and I've been sitting, I've got actually 3 or 4 videos here I need to record. I just haven't had the time, been too busy. But this was about 2 hours ago. No, actually it's probably looking here, it's about 3 hours ago now. So I got up getting ready to go to the gymnasium, and I saw this setup. Now this is on the ES, and my apologies if I didn't say that there. The other trades were all on the ES. This is on the ES 2-tick Renko, and it doesn't matter which charting platform you're using or which type of chart. So this is a Renko. Up here, these are all and see that there, that's called my trade line. See that there? So you can either enter using my super scalper, which means you're not going to be in realistically till the 3rd candle, or you can use the trade line turn. See how it turns from white then to black, then white again. Have a look at that there for the accuracy, and you'll be amazed at what that is and how it works. But look at this here, all the way down. So you can use it with actually with trailing as well. You're out of it down here, now you're back in to the trade back here. But the point down, yeah, you're back in here and out there. The point is here, this was a very high probability trade, and I'll show you on the charts because there's something I want to show you on a higher time frame. Now what you can see here is we're trading with, or potentially, I wasn't in these, but I was just labeling these for a coaching session very shortly, very soon my time, long. Now we're getting what we call toppy. When you start to get a lot of angulation, you want to be very careful. Okay, we rallied up. You want to wait for what I call a 2B. That's where you've got multiple EMA bounces on a number of time frames. That's what a 2B is, and away we went. Then I jumped in on this particular trade. I had a double top, and a double top doesn't have to be perfect. It can be either way, 1 or 2 ticks. Looks like a duck, quacks like a duck. It's a duck. Okay, and I then entered. Now I normally go to break even, so I was after 10 ticks on this. So normally I go to break even at +6. However, because of the wave that I'd had and the market was rolling, pretty confident we could go for a larger target. It was what I call an 80-20 trade, good 80% chance, if not better, this was going to give me a full return, 10 ticks. I went for this one. Thank you very much. I was out. Then it was time for me to go to the gym. My wife and I go together at least 5 times a week. I'm 65, by the way, and try to stay in this business. You've got to be mentally fit. You've got to be what I call on the ball. Okay, so that's another story. So down here, I just wanted to give you a reminder here that at 5:45 Central Standard Time, if you have any open positions, your broker, unless you've got the overnight margin, your broker will close any open positions and usually charge you a fee for that. So that there was at 2:30 Central Standard Time. Usually around 3 p.m. Central Standard Time, you'll find the market really becomes untradeable quite often. But anyway, let me quickly show you this. This is important. Do not skip this because This is where so many traders fail. So here, if you average $200 a day, now $200 a day is 16 ticks. Now if you're a trader with a 10 tick stop loss, okay, so typically what I'm showing you here, you can get away with a 6 to a 10 tick stop loss using my strategies. It would mean you'd need 6,250 per contract you trade. And I know what you're thinking. Oh, hang on, Ray, that my broker tells me I only need a day trading margin of $500 to $1,000. That may be true, but if you've got a 10 tick stop loss, which is 125 per contract, you just dropped, so on a 1,000 account, 12.5%. The great thing is, traders, you don't have to risk now. You can overly risk. You can start on the micros. There are old traders, there are bold traders, but there are no old bold traders, meaning if you want to stay in this game long term, you've got to follow. It's all about money management, money management, money management. Sure, the setups come a close second, but you've got to follow the money management rule. Now, so you can start as you're about to see on a micro, but I'll get to that in a moment. Now, the bottom line effect is, if you want to be earning your $500,000 a year, 200 a day, if you compound here by week 19, you're on your 10,000 and your account is now 74,000, and I've got to say legally, potentially. And how this compound table works very quickly, you only start trading a second contract every time you double your money, and you can actually get a copy of this by clicking on the link below, the table I use here. And I've also got a little instruction video. So here you can also start with a smaller account, and here I've got with a $5,000 account, and you get there within 15 weeks. You're going to say, what's that? About 4 weeks. Now the difference is here you'd only have an 8 tick stop loss. Now you can get away quite often with a 6 tick stop loss. If you're a new trader, I recommend a larger stop loss because it allows you to tuck your stop under a swing, which I'll show you in a moment. But you can see there 200 a day, which is only 3 trades typically a day in what we do, and you'll see the trades in a moment you want to be taking. Look where you are. You're financially independent for life. Here, what if, and actually I didn't upload this, let me pause this and put the right slide here. Here we go. Now this is the right slide. I just thought I'd put this one in just for the experienced traders. The experienced traders, smaller stop loss, but you've got to confirm you've got momentum. So here, if you've got a 4,000 account, now what's the logic behind 4,000? It means I can have a stop loss of, and I'm sorry, I didn't even say this, a stop loss of 6 ticks, but we never ever risk any more than 2% of our account. So I'm sorry, I don't think I mentioned that. So over here we go back to this. What this means is I can have a 2% risk, which is $125. I can have an 8 tick risk, okay, which is $100, 5,000. Here I can have a 6 tick risk. Don't skimp on money management, otherwise I'm going to come and drain your account. Okay, because what actually happens, you start losing money, you start to freeze, you fail to then execute the trades. Now over here, what if you then say, okay, I want to spend more than an hour or two by the screen, I'm willing to do that, I want to earn more per day. So let's have a happy medium here. You trade with an 8 tick stop loss, 300 a day, and look where you are in 9 weeks. Potentially, this is a true potential for ES 7 tick trades. Now let me quickly go down here. What if, and in fact I think I even dropped it down here to $10 a day. We'll see this in a moment, because this is one of the greatest challenges for traders is, and let's just do this 10, which is that's the equivalent of 8 ticks a day, okay, which is I told you that these videos are raw and unedited. It's basically 2.5. No, that's not right. On this market, 8 ticks, yeah, that's 2 points. Sorry. Beware of a guy that has a polished presentation. Okay, I'm a trader and I love it. Anyway, down here, what if it's only $10 a day? You want to start on the micro. What we've got to do, traders, the number one thing is everything we do in life, just about everything, is driven by our subconscious beliefs. And it's the our conscious is only the tip of the iceberg. The most of the iceberg, if you look at it in this way, is our subconscious. If you don't believe, maybe as a brand new trader, yep, you've watched a couple of good videos, yep, you believe you can make your $1,000 a day per contract. That's okay until you drain your account a few times, but then you're going to have all these lack of self belief, and your subconscious is going to drive you. How do we rebuild a trader? Well, we do that here, traders, by having realistic targets. Now let me just give you an example here. So say if you start on the micro and you're following my advice with a and that's wrong there. That should be no, that's right, sorry, 8 ticks a day, right? Sorry, I'm just checking this here. 625 account, netting $10 a day, potentially in 36 weeks. You've got the account size there to roll over $6,250. Stay with me if I'm confusing you here. So you're thinking to yourself, I've tried this, I just haven't made it thus far. I'm bloody hopeless. How do you build a belief? Evidence defeats disbelief. You start on a micro, you start hitting tiny goals, and we keep stretching. It's like going to a gymnasium, and this is where traders get it wrong. You know, they go to the gym a couple of times, they're sore, and they get lazy. You've got to go regularly if you want to get the body. Likewise, if you want to master your trading, you've got to step up to the plate daily. So if you say every day, and say if you only want to trade 1 to 2 hours a day maximum, and you went for just $10 a day, and then you went over to the simulator, worst case scenario here in this example, 36 weeks, you're earning $470 a week, by the way, and you've now got the money to roll over to a big contract. Okay, what if then you only went for, on the big contract, 100 a day? Same thing, we've got the large account now. 46 weeks later, you're now on $10,000 a week on only $100 a day. Now down here, you'd be trading 20 contracts. The ES is a walk in a park with 20 contracts. Turns over typically 1.5 million contracts a day. So that's only two, what I'd call scalps a day. So that's 150 less $10. So actually here it's actually 140 a day here. You would actually be earning after net of any losses. Okay, and from there you can start to increase your target. This, traders, is the true potential. Now what will actually probably happen is you're following this religiously. By week 14 or 15, you're saying, you know what, I'm getting the hang of this. In fact, I've got an email here. Let me just show you the date. So I'm actually recording this, by the way. I don't want to show you the name of the member. This is so hopefully you can see that it says Monday. So this is Monday 21st of October 2024, and here's what he says. Where's my glasses? This is important, traders. Hi Ray, I've been developing daily habits to improve my trade results significantly. One of the most important aha moments for me is to trust the indicators and don't doubt myself. I'm also learning to let my runners run when opportunity arises. See you later at 8:30. Reason that's important, he's attending training. Now once again, you don't have to attend my training, but he's turning up every day. Okay, he's learning to trust. He's listening to the right videos, and that just made me think. Got another an email from a member a couple of days ago that on Spotify or wherever where'd he buy it from? It was not The Disciplined Trader, but Mark Douglas's other book. He had to drive up to San Francisco, and so what's his other book called? Just can't think of it right now. So we listened to that in the car, and he said, just tell everyone they should be listening to Mark Douglas, which I promote every day, by the way, for Disciplined Trader, and I just can't think of his other book right now. So you can listen to it if most of you are still going to be working, you can listen to it in the car as you drive to work and home again. Remember, 90% of trading is head, 5% is money management, 5% your setup. Now here, 10-15 weeks into it, you might say, you know what, I'm going to start going for $12 a day, $15 a day. You're building both confidence and competence. Okay, let's now go to the charts. I want to point out a couple of things that I promised you, which potentially will change your trading forever should you listen to me. And unfortunately, I know that most traders don't. Okay, they keep jumping from one thing to another, and you know what, I'm breaking all the rules of marketing here, and I don't care. I don't need the money. Is that I take the money, but I don't need it. In other words, if you decide not to join because I'm direct with you, so be it. Good luck. But traders, what I'm going to show you is going to change your trading. So let's look at this. First, we're going to go to the charts, but when we go to the charts, we've got to consider what we call our pivot levels and Camarilla pivots. You can get away with either cam pivots or traditional pivots. You don't have to use both. I now really like both. What's the prior day's open, high, low and close? Our major EMAs being the 89 and 200, the intraday swing highs and lows, and the current day's high and low. Why are these important? Because they're price magnets and major support resistance levels, and you'll have traders, we buy and sell into these levels every single day. So first of all, let's go. Let me just minimize this, and let me just pause this for, there we go. So let's just start with this. So this is this morning's trade that I took that I'll show you. First of all, this is where you've got to take the time, traders, and learn how to trade with both an entry chart and an anchor chart one. It's really quite simple once you understand the methodology behind it. See this black line, this major support line? What that is on my higher time frame. That's telling me I have a 200 EMA bounce. And what I want you to notice here, and this is just before my trading, and I wanted to show you this. Look at this here. Besides having angulation, for members watching this, yes, it's a T3. That's a trade on its own, and you had another one just there. This is what we call a 3B just here. Now look at my trade line. See how it turns white, then it turns black. Now that turns on a dime. It's not down here. It turns basically on that candle just there. So you can use the trade line to either stay with the trade and go for your runners. You'd be out on your second candle there, but also we can use it for re-entering trades, such as like just here. And this is the ES, which is $12.50 a tick. Now we come along here, had another entry, a couple of entries here. Now this is at 5 a.m. my time, out of bed, grabbing a coffee, pulling back. Now Ray, you've marked all of these up. Why didn't you take this trade? Here's our lesson. Like it's probably number of lessons I've given you, but here's a really important one. What's happened here is this: does my anchor chart 1 confirm this particular trade? In other words, if you're surfing, you're going with the tide. Okay, you're going with the waves. Well, actually you can surf when the tide's actually going out, but in this case I want you to look on the right hand side. I discovered a formula, and I want to say discovered, it makes it sound like this great breakthrough. Well, for me it was changed my trading, where mathematically certain time frames you have what I call multiple EMA bounces, that is my entry chart, anchor chart 1, anchor chart 2 and I've got a formula I use for different time frames. For an example, this is the 2 tick, and today it was very quiet on the ES market. You could get away with a 2 tick Renko. We're on a really fast market, you're going to have to use a 4, or you could get away here easily with a 233 tick chart, where on a busy day, if you like your fib numbers, you might have to use, say, a 610 or a 500, which is not a fib number, but anyway. But I want you to note just here, look over at your anchor chart, see how all of your candles are still green. So when I have a retracement, yes, I get my trade line hooks, it changes color up there, beautiful. But look over here, I want to see my anchor chart 1 candle close as well, confirming the trend continuation. That did not happen, so you would have gone long. For members watching it, yes, it was a T10, also a T20-1. So up here you had another trade entry. If you're in, these are, by the way, these ones are all black and white. There's 100% rules based, these particular entries. Okay, so do I have a fanning of the EMAs and a fanning? Am I trading in direction of a trend? Now we're getting up here, and this is where I'm about to get into the trade here. We're getting what I call top here, a lot of angulation. When you get this angulation, you're much more likely to have a pullback or a retracement. Just watching the time because I've got a class shortly. Okay, now it's starting to get interesting for me. Now I'm also looking at the time because my wife's going to be up waiting to go to the gym in a minute. So we pull back here, I then bounce up, and I then get a beautiful double top. Now let me pause this and I'll show you something on the anchor chart here. So I've got a double top, I have no divergence, but on my anchor chart 1 I've got a double top, I have divergence, and even my BB is rolled over. So I've got a trade entry right here. Now you might say, well, hang on, Ray, it's not a double top, it's down by 1 tick. Quacks like a duck, looks like a duck, it's a duck. Okay, and so in I go, thank you very much. Now in this particular case, I entered it at 89.75. Why did I enter at 89.75? I wanted to see the anchor chart 1 candle close. So using your anchor chart, like over here, see this here, see my trade line, which is a different setting I use on the anchor chart 1. See these trade entries, even this one here still hit 4 ticks. All of those are in the direction of the trade line on a higher time frame as well. So yes, you can use it solely on your entry chart, but when you're trading in the direction of a trade line, it becomes what I call a loaded trade. Anyway, we rolled over and away I go. So down, and for members watching this here, yes, it's a T20-1, but here I hit +6. Now the reason I stayed with this trade is that usually at +6 or +7 I'll go to break even, but I was going to stay with this because I had great angulation. All of my trend indicators, I had 4 trend indicators all rolled over. And remember what this member said, indicators, do you know why they call them indicators? Because they indicate, but they're only an indication what price may do. But having 1 or 2 reasons for taking a trade's good, but having 5 or 6 is even better. Okay, so then I jumped in, thank you very much, and down I went. Okay, and then we went to the gym, so I got out there and there was another nice little trade just there, and then we rallied up here. Look what happens right here, by the way. So see that just there, you had a trade entry. Members watching this, yes, you had a T10 just there. Now and you had one just there. Now let's just then look at now. And just one thing before we go, I know time's getting on. Okay, so just here, traders, you had a trade entry, and I'm going to tell you, so I had one just there, mechanical entry just there, and I would have been stopped on that particular entry unless I waited for the trigger line on the higher time frame. See how it's black? However, hand on heart, I would have taken that trade. There are times when I'm not waiting for the trigger line on the high time frame. But then here is my next trade right there. Okay, so there, and by the way members, it's a T10 on your anchor chart 1. So even though I got stopped on that one, away I went with that one. Now just to show you one more thing before we sign off, some trades. Let me just turn this back on. Whoops, pretty much showed you this anyway. T12 Fibonacci retracements. Look, from there to there, that was an exact 61.8. So for fib fans, I know you'll be interested in those. Just there, major divergence, had beautiful divergence trade just there. This was an exact, well actually it wasn't, my apologies, it was a 70.7 of a 78. It was in that zone area, but it was also what I call a T12, very high probability setup. Okay, and that's where then I entered these trades. And this is where, when you're selling in to pivots, okay, selling into pivots, traders, this is where I want to take profits. So here, this is another 3B. Now what I want to say on this, what's the direction of the trend? What I can see here with this overhead trend line, this is telling me what my anchor chart 1 is doing, because in the end I want to be trading in the direction of the higher time frame. I can also use my major EMAs just here. Now I personally also believe in what I call the POQ, the power of quitting, which means I like to hit a target, get in, get out, get paid. And by the way, I don't generally trail. I like to use a fixed target on the ES, usually between 6 ticks and 10 ticks, depends on the volatility of the market. Now here was another T3, no-brainer T3, which I wasn't in on that one. I didn't jump in this one here, and I think I mentioned here that was into the pivot. I got it greedy. I should have got out with 4 ticks, which is $50 per contract here. Now in the end, to simplify it as much as possible for you traders, initially you want to be trading in the direction of the overall trend, using the trigger line. See where it changes color? There was a re-entry just here. Now it was on yesterday's open, but if you took that one, you also had a slingshot trade. There was your re-entry here. That was a 50% retracement for our fib fans. Notice up here you're bouncing again off the higher time frame. If you bounce off a higher time frame, or you have a pivot bounce, see how all of my EMAs are in an uptrend. Expect a bounce. Now can I sell that there? Yes I can, but I want to cover my trade down here. Why? Because of this reason. For an example, see this here, this is basically within a tick of being a double bottom. It's a double bottom pivot bounce. Now in taking this particular trade, if you know you've got downtrending higher time frame EMAs trending down, you want to either cover or get to break even when you hit these major areas of support or resistance. They're pretty basic rules. In fact, you can now I can fit just about everything I do on one sheet with just about every setup I trade. So here, all of these are just no-brainer entries. But hang on, this one only went 3 or 4 ticks from my entry. Yes, but cover at the pivot. Now we may punch through like we did over here, but you can always re-enter the trade. So if I'm taking this trade here and I know I've got a pivot here, this is where I'm going to scalp. If I take this one, I've got greater room. Okay, this is where I go for a larger target. You see, in the end, to be netting say, let's just say you want to net $300 a day on this market, traders, that's what's that, 24 ticks a day. 24 ticks a day. That is, and these are, even by the on my apologies, each one of these is 1 tick, by the way, on this time frame. Higher time frames you get like 2 ticks per step. I call these steps, by the way. You want to see 24 steps, if you like, a day. Forget the money, focus on the ticks. Okay, 24 ticks a day, that's 300 a day. Now on that point, as we finish, and this is where are we here? As you get smarter with your trading, and when I say smarter, I mean greater amount of experience, you want to still be allowing quite often 8 ticks, but you can see where you are with $300 a day. Okay, you can see fantastic income potential on 300 a day, which you should be usually achieving, especially during New York, within a couple of hours. But be very careful of a New York morning. Now we'll finish up on this. Okay, I call it the killing field, particularly the first 30 minutes. Unless you're a very experienced trader, you want to be very careful of the time frame and when you actually the size chart. And traders will say to me, what's the right time frame I should be trading? Whichever one is tradable. It's got to be slow enough for you to trade. So traders, we're now 45 minutes into this video. So what's your key takeaways? Trade with the trend. Look for EMA bounces off trending EMAs. Be careful and be aware of your pivots, major EMAs, open, higher, close, and low levels, and your major intraday swings. Let me just show you this right now. Okay, so here we are. The Globex market just opened. When I say just, it's been open for actually an hour and a half. When the market opens, it's called the Globex session, by the way, traders. And so we can see here the market opened over here at 1700 hours, and see that just there I've made a lower high. I'm not going to take my first trade for the first 5 minutes. Now I've made a slightly lower high again, and look at this here. We've dropped down to our major EMA like clockwork. Look at this here. We're bouncing off an EMA and we're bouncing off the pivot. Let's just no, I won't go into, I was gonna it's already over for time. But that there, if not there, if you looked at your anchor chart, you would have just had a beautiful trade entry just there. Okay, because on the higher time frame you would have seen we were actually there it is right there. Let me pull this one down, just makes it easier. Pull this down, and what you can see just here is we've rolled over, and see the trade line on my higher time frame. It's screaming sell short. All right, traders, so finally let me drag this out the way. Become a member, okay, where you'll get to attend 8 of my sessions. If you can't attend the live session, whoops, you can also then watch your recordings, and if you wish to continue, by the way, after the first month, you can drop me an email and say, look, I want to continue in the live coaching room. You can attend those for then only a low fee of $97 a month, or I've got a live trading room as well, which you can end up joining. I also have an elite traders group, maximum of 12 traders, which actually goes over 6 focus weeks, and the whole idea is to get you trading, live trading, within 6 weeks. However, that's another story. But if you want to look at, okay, I'm on a budget, I'm a new trader, start on this. Okay, $197, and you basically get the works and some coaching sessions. All right, anyway, I'm going on and on and on. Look, I'm just looking at this here on, look, let me show you this as well. I've got to do this. Now when I say I've got to do this is on oil for Texas tea. Okay, now just here, 703, my first setup is right there. Look at my trigger line, look at my EMAs are rising. So that's my first trade on oil, or would have been for the day just there. Now oil doesn't really fire up, by the way, until 8 p.m. Eastern. That's when you get the Tokyo and the Shanghai markets open. So that's where you'll see then oil will really start. So that's yeah, so that's another, what is it, another 45 minutes or half an hour, whatever it is, before that opens. But that's your first trade of the day, and this is $10 per tick. 1 2 3. Generally on oil, if you're wondering, I'm after 8 ticks usually. Anyway, traders, come and join me. See the description link below. Hopefully you picked up some ideas. Shame on you if you didn't. Go back and watch it. All right, traders, thank you. See you on my next video. See you in the coaching sessions.